All right, we're still on section 19.1, and this is part of the inventory method, is to find cost of goods sold. So to find cost of goods sold, you take the cost of the goods that were available for the year and you subtract your ending inventory amount. So you're always going to be given those numbers on a chart or something to figure with. So for this particular example, the one that we were working on the previous slides, I couldn't keep on with that one, it was getting too long. Our total inventory for the year was $708.50, and then we are going to subtract each one of the inventories. So we did weighted average ending inventory, and it was $293.04. And so to find cost of goods sold, we simply subtract. So $708.50 minus $293.04, and that will be the amount that we sold for the year. Notice the name, cost of goods sold. So this is how much we sold. We had $293.04 left in the inventory. So the difference between those two numbers hopefully makes sense, that that's how much we did sell from the inventory throughout the year. On the next one, same amount from the beginning, right? We had the $708.50. When we figured it with first in, first out, our ending inventory was $294. So we subtract those two numbers, and cost of goods sold for this method was $414.50. So that's how much we sold for the year. With the last in, first out method, our ending inventory was $281. Once again, we're going to subtract. So that leaves us with cost of goods sold of $427.50. So it's a simple calculation, but you have to understand what it means. So when you see cost of goods sold, or COGS, then you have to say, oh, here's how I find that. And that's usually what gets tricky about any of the things we do in business math. Okay, here's another example. The chart's all filled out this time, so that's nice. We're going to find, these are dog collars this time, and so our ending inventory is $195. Notice this number right up here, ending inventory, that's important. We also have a total, right? That's how much we sold altogether, and we're going to need that for cost of goods sold. For this method, we don't really have to do anything with the total on the number of dog collars. That 550, we don't have to do that. So the value of ending inventory for last in, first out, remember we're going to go back to the beginning of the chart, and we're going to come up with 195 dog collars. So we're going to definitely use this category, right? There's 55 of the 195, so if we subtract that, we have 140, and then that means we're going to have to use the second category, and then from the third category, 55 and 25 is 180, so we still have another 15 collars, right, from this category, so 15 times 1. So those will be the three that we calculate to add together. We already know the total for that one was $96.25, and then 125 times $1.50, so $187.50. And this last category, we just needed 15 more. Remember, when we add the 55, 125, and 15, we have to come up with 195 because that was how much was left in our ending inventory. This is $1, and so it's 15. So our total on this one is $298.75. So that is the value of ending inventory. Cost of goods sold, remember we take the total amount available, which was the $796.25, and we subtract $298.75. So cost of goods sold for the year is $497.50. All right, so that's the last in, first out method. This one's a weighted average. Notice I didn't really put them in a certain order. Now for weighted average, we actually do need these two numbers. Ending inventory is the same. So we're going to take $796. Remember, we're finding the average cost of a dog collar. So we're going to take our total amount for the year, divide it by the number of dog collars that we had in our inventory throughout the year, and then divide. Now remember, on your calculator, you want to key this number back in. If you look at it and round it, we're rounding it to dollars and cents. Key it in is 145, right? So $1.45 times 195 dog collars, and that is a total of $282.75. So if you're off on one of your calculations, it probably has to do with not rounding, because in this case we do have to round. I actually have a little circle thing that circles things for me. There we go. And then cost of goods sold, we're going to take the $796.25 and subtract $282.75, and that is our cost of goods sold. Remember COGS of $513.50. Okay. And then next we have the first in, first out. So now first in, first out means that instead of going to the top of the chart, we go to the bottom. First in, first out, think about that. That's the first ones that were in the inventory. And so the ones that are left are the ones at the bottom of the inventory. So we need, once again, 195. And that means we're going to take 55 from this category. So that's times $1.90. And 60 from this category. So 60 times $1.80. And 55 plus 60, you need to know that because you've got to keep going. And you see, if you add those together, it's 115. Subtract that from 195. So you can also just do 195 minus 55 and 195 minus 60. So we still need another 80 collars from this category. So 80 times $1.50 for that particular type of collar. All right, so we multiply those all out. 104.50, 108, and 120. And we add those together to get the value of our ending inventory, which is $332.50. And circle. And the cost of goods sold, we're going to take the $796.25. Remember our total amount that we had for the year, subtract our ending inventory, and that leaves us with $463.75. Oh, I'll use my nice circle on this one. There we go. All right. So I believe this is our last example. We changed the number of dog collars. I don't know if I can. I'm going to try to just zip through this one so we can get this one on here. Okay, so 107 dog collars, and we're going to do each method quickly. Now, we already know that the dog collars are $1.45 each. Whoops, I'm still on my circle. That's not working. Right? 145, and that's times my ending inventory. So that would be $155.15. Now remember, I got that number, the 145, from dividing the total amount by the total number of callers to get 145. All right. And then the first in, first out. First in means that we're selling all the ones that were at the beginning of our chart, and what's left is at the end. So we'll take the 55 times 190. I can't really mark up the chart this time. 55 times $1.90. We know that's 104.50. And then from the second category, we actually don't need all 60 of them, but we need 52, because 52 plus 55 is 107. All right, so 52 times $1.80, and that's $96.60. So my ending inventory is $198.10, and so that's it for that one. And then last in, first out means we sold the ones at the bottom of the chart, so we're going to get our ending inventory from the top of the chart. 55 times 175. Oh, and I guess that means you know how many we need from the next category would be 52, and then 52 would be times 150, because remember we're looking at the top of the chart this time. And so when I multiply those out, I get 96.25 and 78. Add those together for a total of 174.25. All right, so here's my numbers. Kind of missed. All right. It doesn't want to go there. That's the totals for each type of inventory. So just be sure, make yourself some note cards and practice this, and look at examples in the book as well, and practice, practice, practice. Bye.